Chris, how's it going?
Yeah, pretty good. How are you?
Yeah, I'm good, thanks. So today we're going to we're going to run through the first part of our mini series on scalping. Earlier we made a podcast on scalping, and so this is our follow-up video. So in this mini-series, we're going to be talking about day trading and we're going to be talking about positional trading. But today our focus will be on scalping and what it is and basically how you use it, what strategy you can use to scalp successfully. So in Forex terms, scalping is basically a short-term trading strategy, and you use it to profit from very small fluctuations in the market. And scalpers generally use 1, 5, 10, and 15-minute timeframes, or should I say 1, 5, and 15-minute timeframes. And they use technical indicators, and they trade in and out many different times a day.
Yeah, it's a very high-speed trading method, and so there's a lot of things. As you know, there's a lot of discipline involved. So what we've put together here is 6 rules of scalping strategy. So the first one we've got here, number 1, is watch the spread and watch your commissions, because you're going to be trading multiple times in a day. Your spread is going to impact your profit quite significantly, and same with commissions. So every time you enter an X in a trade, you're going to pay a commission, or you're going to be paying, you're going to be losing some of your profit to the spread. So keep aware of that. Make sure make sure those are as tight or as low as possible. The second rule is don't scalp the announcement. Scalpers rely on market news quite often, but you don't want to scalp the actual market news announcement. You want to focus on scalping post-news releases. Look for the price follow through, and that'll go generally in the direction of the initial market reaction. Sometimes it doesn't. It'll be fading. So be ready to change and switch and take the other side. But yeah, so it can be dangerous sometimes to scalp the announcement. And the third rule is scalp highly liquid pairs. So you want to focus on major currency pairs. So the big 4 majors, so Euro USD, USD JPY, JPP USD, and the AUD USD. I would recommend using those 4. These have a high volume. And the reason why you're doing this is less liquid currency pairs are less predictable in terms of technical analysis, more erratic their price movement. And also, as I mentioned before, it's about the spread. The spreads are wider on less liquid pairs. So you're going to be paying more because you're trading so often.
And especially if you're trading on very quick, if you're in and out 1 and 5 or 15-minute time frames, you're going to be paying very sort of high proportion of your profit to the spread or possibly to the commission. But as you said, the spread widens with less liquid pairs. Then the other thing is you can scalp the major trading sessions, so when they open. So there are times in the day when the market is more active and where the price is more predictable. And these are generally when the markets open in the different regions of the world. So, for example, the London session opens at 8 a.m. GMT, the New York session at 1 p.m. GMT, and the Tokyo session at 12 at night, so 12 a.m. GMT. And during these sessions, you'll see a big change in the volume of trading happening. So if you trade when these sessions open, you'll often find that there's a break in the resistance or support levels, and scalpers often take advantage of these different movements in the market. Then the 5th rule is that you'd want to brush up on your technical analysis and your use of technical indicators. So you've got 2 different types of indicators. You've got momentum indicators, and then you have support and resistance indicators. Some examples of momentum indicators are the stochastic oscillator, the MACD, which is the moving average convergence divergence indicator. That's quite a mouthful. And then you have the RSI, or the relative strength index indicator. And then you have other indicators for support and resistance, and these refer to the Keltner channels, is a very popular one. And then you have moving averages, which almost every trader uses. You've got normal MAs, and then you have exponential moving averages. And then you obviously have pivot points, which is another one that traders often use for support and resistance, to indicate the support and resistance. And our sixth rule would be develop a trading strategy and stick to it. So this is a very important point. We often talk about this in our podcast. We talk about it all the time, is having a trading strategy and being disciplined to stick to your trading strategy. So scalpers often buy at breakout levels, and then they sell quickly if the price moves against them. And this is obviously because they don't want to lose, even if it's small amounts of money, you don't want to lose by waiting there for too long. So selling out very quickly is important if the price does move against you. Then always setting up a stop loss. We always talk about this. It's very, very important to set up stop losses, particularly for beginner traders. Beginner traders should set them very tight. So most traders set it just below the recent low or above the recent high, depending obviously on which direction you're trading. And then if you have a daily goal of how much you want to make for that day, if you've hit that daily goal and you've done it within 3 to 5 trades, stop trading. We often find that traders will make their money and get to their daily goal and then almost get overexcited and overtrade and lose that money. So a very important part of developing a strategy is to stop when you've reached your goal. So I think those sort of cover the 6 trading strategies that we sort of very basic rules for beginning with scalp trading.
I think those cover it quite well. So what is it? Watch the spread, watch your commissions, don't scalp the announcement, scalp highly liquid pairs, scalp the major trading session opens, and brush up on your technical analysis, understand what you're doing, your technical indicators. And number 6 is when you have developed your strategy, stick to it, because you're going to need it. It'll save you a lot of time and heartache. I think what we're saying here, with these 6 rules overall, is that scalping takes discipline. These are more so. I mean, all forex trading takes discipline, but scalping in particular, you need to have an iron will. You need to be very focused. The other thing to consider with scalping is that not all forex brokers allow scalping. So if you're looking for a broker that does scalping, you got to make sure that they allow scalping first. And then, as you said, you want tight spreads, low commissions when you're looking for a broker, because you're going to be scalping a lot. And you want a reliable broker. I would recommend using one of the bigger brokers because you don't want to lose your trading connection, in the middle of a trade.
Yeah.
Make sure you're using someone big. And if you get serious about scalping, you're going to want a broker that offers VPS service, a virtual private server, which is a virtual private server is when you have direct connection to a trade terminal that is connected very close to an exchange. So your trades are going to be much faster. And this is especially important if you're going to be using algorithmic trading with your scalping. What else? Oh, and trading tools. There's some really cool trading tools out there for scalpers. Our favorite is Auto Chartist. It scans pretty much all the CFD markets, and it scans on multiple time frames. And it will show you technical setups. And very, very cool for scalpers, because as a scalper, you don't care about what you're trading. You're just looking for the technical trends and see if they make sense. So Auto Chartist, but there's others out there. I think Trading Central do a host of scalping tools as well. But is there anything else we're missing here when looking for a good broker to scalp with?
Well, I think just on that point, Chris, that you'd also want to have a broker that has a lot of different CFDs. So you don't want to be limited by the number of CFDs you can trade, because obviously then you have more opportunities to trade those instruments with high volatility and high liquidity. So we would also suggest looking for a broker with CTrader, your favorite, Chris.
Yes, of course. Very important.
It has a trailing stop loss that functions from the broker side rather than from the terminal side, where the trader would set that trailing stop. So once it's been set on CTrader, then it remains in place. Whereas with MT4 and MT5, for example, once you set that trailing stop, if your terminal goes off for any reason, whether you're having load shedding in South Africa or you somehow lose connection, the stop loss won't remain in place. So it can be a bit more sort of dangerous. But with CTrader, if you need to get up from your desk, or you need to, you lose power or you lose connection, that the stop loss will still be in place. So you don't have to worry.
Yeah, exactly. It's good. I like CTrader a lot, and that's another good reason to like it. It's basically just good risk management.
Yeah.
Especially if you're scalping. I would recommend CTrader. Yeah, so I think those are the things you need to look for in your broker, and I think we've covered 6 major rules. Yeah, that's it. And I think next week we're going to talk about day trading. So we're going to run through some golden rules for day trading as well.
Yeah. Well, if anybody else has any questions for us, we were responding to a question on scalping and how it works, and we thought it was a nice sort of mini-series to cover. Please send them through to fxscouts.com or tradeforexsa.co.za, and we're very happy to answer any questions.
Yeah, thanks.